Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter. Market is coming down, and this is something I talked about over the last couple of weeks. I went from being bullish through this channel to being slightly bearish, and if we break from here, I'm going to become more and more bearish. This is S&P 500. There's one top, which is the left shoulder. There's the head, and there's possibly a right shoulder that can take us way down. That's S&P 500. This is a drawing that I drew last week as well, so just for you to compare it with. Dow Jones Industrial Average is looking actually even worse. You can see a double top over here, and then you can see a possible lower top, which will signal a downtrend and come down. Show you the NDX, NASDAQ 100. There's NASDAQ 100. NASDAQ 100 looks a little bit different, and that's technology. Technology is really carrying us up right now. I'll show you what sectors are carrying us down right now. This could be a double top if it happens. There are a few things that are going on right now that the market is looking at. One of them, Democrats are about to finish their race. Either way, might finish their race. I mean, we've been guessing that they're going to finish their race for quite a while, but who knows what's going to happen with that. That's one thing. Second thing, we have a full week full of employment data. We have all the way from productivity to initial claims to average work week, hourly earnings, non-farm payrolls, unemployment rate, and so on. We also have consumer credit that's coming up all this week. This is going to be a very full week full of news. We have a serious energy crisis right now. Prices at the pump are going sky high. Feds have to do something about it. Somebody has to do something about it. Otherwise, it will cripple us. On the other side, we have a housing market that is very, very fragile, and it keeps going down and going down faster and faster. We also have a dollar that keeps going down faster and faster. Now, that's not a good recipe, and I have a feeling that we are going to see some action from our non-actionable, non-active Fed. I think that might happen this week. I'm going to show you some stock picks tonight that are going to show you basically the same thing I'm talking about in the overall. Here's a dollar index. And you can see we've been going down, but now we are actually doing higher bottoms, which looks like great news. Except if this is a lower top, and then we'll have something like this, and we could still go down. It is stabilizing. I do think we're coming back up, but it did the same thing over here. Notice the similarity in pattern between this one and this one. After this one, instead of breaking to the upside, it broke down again. So that can happen as well at this point. That's something I think the Fed is really, really watching, and if they weren't worried about it as much before, they're really worried about it right now, which of course is relative. From very, very worried to very, very worried. Some of the stocks that we've been having really good trading with, for example, is Lehman Brothers. We shorted at 41.37, went all the way down to the $36 level. That's a financial stock that did very well for us. CRBC, our bank, went from 8.03 all the way down to the $5 level, a tremendous amount of profit in a very short period of time. The Chicago Mercantile Exchange has been under investigation. Well, the whole commodities has been under investigation because the Fed is investigating them for manipulation in energy prices. 451 was our entry, went all the way down to the 428, which is very nice trade on a very heavy stock, but we're playing the options on this one, so of course it mitigates that. Now the other side of it, what I was talking about before, is the technology stocks are going up. This is, for example, Western Digital. We bought at the 36.06 level, and it's going all the way up to 37.55. These are very, very small trades, and I'm just showing you trades that we started in this week. This is not trades that we've been holding for a while. So it's that's just a sample. But you have to be in the right sector at the right time. I think the financials are in big trouble right now. But I think the technology is going up. So that's why our trades are divided that way, and they're doing very well. I want to show you some more stuff on the real estate side. There's KB Homes, and I'm going to fly through these really, really quick. KB Homes has been going down, sitting around top of support, about to break. CTX, Centex Homes, also top of support, about to break. Pulte Homes about to break. Developers Diversified Realty, Camden Property Trust, Lennar Homes, and finally the Spider, the S&P Home Builders. This is what I would do if I were you. You can, instead of shorting all of the home builders, you can just short the spiders themselves, and you can see the type of wedge. And first wave is done. We're now going for second wave, which will be a downtrend. This is what's causing the S&P 500 to come down. There's quite a bit real estate market and financials. So that's this one is the one that I would do. And my entry on this one is 1970 to catch the second wave down. That's the one that I'm looking at. If you're doing the whole spider, you're very well diversified, and you're betting on the whole sector coming down. Show you another sector. Lehman Brothers, really getting hurt right now. Washington Mutual, stock that's really involved in the subprime mortgage market, right on the verge of collapse. Just the same way I showed you before, CRBC. CRBC that broke down completely from 803 down to 5, which is, if you think about it percentages wise, it's a lot. Washington Mutual, basically the same thing. NYMEX, the same thing as the CME, so also about to dive down. Genworth Financial, CIT, HBAN, UIG, which is the ETF, KB, and finally XLF. So XLF is the one I'm going to recommend for you. It's the S&P Select Financial Spider. So another spider. So we're going to do the home builder spider. We're also going to do the financial spider. Now, financial spider, this entry point might be a little aggressive. Let's use 2435 as an entry for the short side. Guys, the nice thing about trading for income, trading for living, trading for growth, or trading for safety, or whatever you're doing, is the ability to go short when you need to. Going short allows you to take advantage of the opposite side of the trend. Some people, for example, most of us own real estate, some type of real estate, and we're losing money on our real estate, because if you own real estate, you're probably losing money on it. More than likely, not everybody, but more likely, then you can offset those losses by going short on the home builders, for example, which is something we've been doing for quite a while. We actually shorted the home builders somewhere around here, around this level, and we've been riding them down all the way down, which offsets quite a bit of the real estate pain. Can be done again. Banks, financials, also the same thing, also can be shorted and taken advantage of, while everyone else is if you hold an asset, if you hold a house, you can't go short on a house. You have to hold it until it comes back up. Well, with trading, you're able to do that, and you're able to mitigate all of the financial pain that people are experiencing right now. Guys, I highly encourage you to look into trading as a way to offset losses, as to balance your portfolio and grow it in all conditions. Anyway, have a great night, and I will talk to you next week. Hope you're enjoying this. Take care.